here and made this short-term low, and then went back to first percent to fair value gap, sells off, taking the sell side out here. During a time when it's primarily bullish, we're looking for higher prices still. Okay, so we're going to go to a 5-minute chart. I'm going to show you, which will be obvious when we get here. And there is this morning's setup right here. So we have that low taking out the sell side with this stab below it. So right away, whenever I'm looking for a stop run, and I have a bias that's bullish or bearish in this case, told you we've been looking for higher prices as long as that daily yellow fair value gap doesn't have a close below it. My interpretation is the market's going to want to go higher. It's going to reach for discount to premium runs. Like it drops down to a discount to a PD array that is bullish to run to a higher time frame premium array. Okay, so that's why I gave you the higher time frame daily. That's up here. See, that's it. Fair value gap. I told you I want to see it. Try to trade to and turn into an inversion fair value gap. But right now, this is where we were at this morning, 9:30 opening. First percent of fair value gap is in here on the 1-minute chart. But this run below that low here, that is going to be our catalyst for Venom. Do we have a single candle run below the sell side liquidity pool? Yes. Do we have a candle that leaves that low and goes back higher on one singular pass higher? So we have a sell off, at least one minimum number of candles, at least one below, and then leaving it. Well, we have 1, 2, and then here we have the big buy side of balance, sell side of efficiency. So we have SIBI, inject the venom, run away from it. So here's the two fangs. Okay, that's the play on words I call for my Venom account or Venom PD array and setup. The criteria is we're going to be a buyer, but we have to be a buyer at the opening price here on that fang or less. Okay, and there's that. So we have to be a buyer at that price or less. Look how much time it's spent in distortion. That's what this is, time distortion. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. 17 candlesticks over an hour just sitting in there, just banging around, not doing much of anything with these small little ranges here. But the range high from here to here, you can clearly see there's an equilibrium price point that it worked off of. So yeah, it's just hovering around that. So that price is just the consolidation of all this garbage type price action, which is meant to wear you out. Traders are not going to see this as an obvious long. They're not going to see this as an obvious short because it stays here and it frustrates them. So what you have to do is you have to submit to something and stick to it. So this candlestick's low is risk, and this candlestick or less is an entry for this Venom model. Okay, so I'm going to show you the entry. There's that. And it was just simply me looking at where we're at in this range and not worrying about it because the stop needs to be below here. And there is the entries right there. So it's inside this candlestick's close and less right there. There it is right there. Okay. And getting out on the high candle as it pokes above this high and this sell side of balance, buy side of efficiency, aiming for that. There's my exit right there. Okay. There you go. And let's go into a 1-minute chart. You can see the details through that perspective real quick. Okay, and you can see how it used the first percent fair value gap in the 315 to 345 macro. Final hour trading. And here's that sell side. Runs below, leaves it. Now, if I was going to use the 1-minute chart, I would have the benefit of looking for an opening of a new long position at that closing price or less, which would have been offered to me here. May have missed it on here. Let's just be fair. It may not have given it to me here, but I had several opportunities here, here, and then starts running away at the lunch hour, noon. Okay. So this is what wears traders out. And whenever you see price going sideways, you're going to have to toggle up. Okay. Go up a time frame or two. So my time frames are obviously 1 minute, and then jumps to a 5, then a 15, and an hourly. But if there's a whole lot of candles on the 15, I might go to the 30-minute first before going into the hourly and see if there's any refinement between the levels and PD arrays seen between 60 minutes and 30 minutes. But generally, that's the hierarchy of where I go to before I get to a 4-hour then daily chart. But this kind of stuff wears people out. Okay, and you're just going to have to bite the bullet and say, okay, I'm willing to assume the trade and get in at the price that makes sense. I saw the setup. The Venom model is on the 5-minute chart. So that's the reason why I framed it with the 5-minute candlestick for liquidity purposes. Running my stop down below the candlestick that pierces back above the low at target. So again, same thing. Drops down, injects the Venom into sell stops here, accumulates those sell stops, and then breaks higher. You have to have a SIBI first and then a BISI leading it, or it's not a Venom. You got to enter below the second candle closing price, or it's not a Venom. Okay. And ultimately the price, starts to run up, as I mentioned. Beautiful, beautiful delivery to the first percent to fair value gap of this morning. And it's Monday, so it's the first percent to fair value gap of the week. So you want to make sure you denote your first one of the week like this. So it kind of stands out no matter what.